Welcome to the March 18th, 2019 Advance Report from McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman, president, McGowanGroup, and we'll take you on a guided tour of the global financial markets and the conditions right now that guide investment decisions. First, we're going to cover a question, and this weekend's program at NetWorthRadio.com is titled, "What is a stealth bear market?" Well, my dad, Papa Dean, great investor, told me once, he said, a stealth bear market is when the market is sideways to down. The longest example of this that I could find, 1965, the Dow hit 1,000, didn't permanently get above 1,000 until 1981 and visited 700 a couple of times, the 73-74 recession. What does this tell us? Well, it was a time period when the market was sideways to down. And that's called a stealth bear market. Until earnings catch up and begin to power a company, then what do you do as an investor if you're not going to get the average growth rate for the S&P 500 or the Dow or U.S. stocks, which has been 6 or 7% over long periods, but we don't want to be dead money for long periods. What's the state of the current market? Well, it's right here. This is the Standard & Poor's 500 index for 5 years and the Dow for 5 years. So let's take a quick look. Back in 2015 and 16, earnings actually descended. Notice that sideways action throughout 15 and into part of 16. And then boom, we get this magic carpet ride. What happened? Earnings started to grow. You had a stealth bear market for a couple of years. Just looking at the index levels and the average price of a stock, then we get this magic carpet ride. That has lots of growth in price factored into the total return. But the absence of that growth leaves many portfolios without an advantage. What do? Well, you get paid to wait, and that's part of the theme of this week's program at NetWorthRadio.com. Here's the state of the current market. There's the magic carpet ride from 2016 through the end of 2017. But whoa, what do we have here? A sideways action, sideways to down even. That's the Christmas correction that we went through, a mini panic concurrent with the Federal Reserve tightening. Why is that important? What strategies does that guide us to? I'm going to show you one of the reasons for the potential reasons for that stealth bear market. The Dow, the same thing. We hit 26.5, almost 27, and this week we finished around 25,800 or so on the Dow. That means that we've been sideways to flat. A stealth bear market really since the end of 2017. And that's something that needs to be addressed in current portfolios. We need to get paid to wait. Well, here's one of the reasons. I mentioned the decline in S&P 500 earnings back in 2015-16 that was concurrent with that range-bound cycle where we didn't get growth in the indexes. And you were just sitting there waiting if you were dependent on the equity indexes, save a 2% dividend. Look at this. These are the quarterly earnings of the S&P 500 actually projected to go down for the next 2 quarters, flat to down, and then skyrocket from $40 per S&P unit to $50 by the end of 2020. So we're in that sideways action for a while. That means we got to get paid to wait. Global high yield and energy infrastructure, not without price risk, but dividends over 7% that have appreciation potential. That's our solution for the range-bound market. If you want to upgrade your plan and get paid to wait, that's what we do at McGowan Group. You can go to NetWorthRadio.com, fill out the preliminary client questionnaire. Be sure to subscribe to the YouTube McGowan Group, because when there are changes in the market, we're going to bring them to you, just like we're diagnosing the current market today. What is this? Well, this is oil versus the pipeline index. Back in 2014, the pipeline index was double where it is today, about 540 on the index. But notice the correlation. That's $27 barrel oil. Why do I bring this up? Notice oil this week moves up to about $58 a barrel, near $59 at the high point. And the pipelines have yet to catch up, but the earnings of the pipelines and the free cash flow are actually better than when the index was almost double. And we can get paid to wait in that index with earnings reports that have been coming in that are very encouraging for price appreciation as well. Big story this week was the 737 MAX grounding. I originally saw 737. I thought, oh my God, Southwest is dead in the water. Well, actually it was a total of 34 Southwest planes out of the entire fleet, about less than 5% of the flights affected. We did a couple of reports in NBC5 this week, and of course WBAP and KLIF some special features there. Well, this is what happened with Boeing. You can see the huge downdraft here from $440 a share, currently trading just above $370 per share. Boeing's price activity did not reverse, but American Airlines and Southwest, it's about the impact of a blizzard. The one thing that's happened in the travel industry, the huge growth has disappeared, the slowing global growth, well, that has an impact, higher fuel costs, but now we've got another unnecessary disruption for those companies when they have to refit this 737 MAX. It looks like they may have that figured out because the old 737s were not grounded. But in any case, the luster is off of this category, and it could be for an extended period. So it's a price warning between now and tax loss selling season this year. Boeing will probably have an announcement within a week, but this shows you the price action concurrent with those headlines and the reversal at the end of the week for the North Texas-based airlines. Thank you for tuning in to McGowan Group YouTube. Be sure to subscribe, and we'll be back next week with the best in financial news. I'm Spencer McGowan, your financial weatherman. My firm, McGowanGroup Asset Management, sponsors NetWorthRadio.com and, of course, our YouTube channel under McGowan Group. Some educational disclosures and discussions that I wanted to add to the broadcast. The first is, I'm very proud of our team, including Stephen Norris, who will be added as soon as we redo the picture. He's our newest team member. Come down, meet the team that cares, get a written plan, because the securities we discuss, the financial news we discuss, that's not a recommendation until you actually come down and get a customized plan at the Crescent. You'll get a tour, and we look forward to seeing you. We're going to cover value at risk of loss in portfolios, and you can see it right here. Learn about our performance, what happened in 2008, how long did it take to recover. All of those items are posted right here at NetWorthRadio.com or the McGowanGroup.com. The other part of the program, when we look at price fluctuations and bear markets and risk control, that's a huge part of NetWorthRadio.com. We look forward to helping you advance your plan and your cash flow. Come down and meet the team that cares.